If you're thinking about buying a property with a buy-to-let mortgage, or if you're about to refinance, and especially if you're about to come off a fixed rate product, then please do watch this video to the end so you know exactly what's going on with buy-to-let rates at the moment. You may be surprised. One thing that's for sure in buy-to-let world is that products and rates never stay the same. And as I'm recording this, the Bank of England have just reduced base rate, which is going to have an impact on buy-to-let rates, and we'll think about that in a moment. This is the last of a series of videos I've done which show you the rates which are currently being charged by the main buy-to-let lenders. And so far, we've looked at Paragon, Kent Reliance, The Mortgage Works, and BM Solutions. And if you want to watch those videos, and as I say, if you're thinking about buying a property or refinancing or coming off a fixed rate, it would probably be a good idea to get as much information as you can. You can find these videos on my YouTube channel here. Now I must stress, as always, this is not financial advice. I'm not qualified to give financial advice. I'm not a mortgage broker. So before you do anything, whether you're buying or whether you're refinancing, you do need to take proper professional advice. So please do talk to your mortgage broker. And if you don't have a mortgage broker, then please do stick with me because I'll show you how you can get in touch with my very good mortgage broker should you wish to. And of course, I hope it goes without saying that this video and my previous videos are not an endorsement of any particular lender, and I'm not trying to send you towards any particular lender, and I'm not trying to dissuade you from using any particular lender. So with all that said, today we're looking at precise mortgages. Now, I should say, please do check these details for yourself. I've been onto their website and had a look, and this is what I saw when I was on their website, but things change all the time, products come and go. And of course, with the news that the Bank of England have just cut base rates, it's very likely that products offered by all lenders are going to change over the next days or weeks, so please do go and check for yourself. But when I was on the website, this is what I found. Standard features of all of the mortgages I'm about to show you will allow you to borrow between £40,000 and £3 million. Should you need to. And as I've been looking at each of the lenders in this series, I've been specifically looking at a loan to value of up to 75% so that we can compare like with like. All of these mortgages can be capital and interest or interest only, and apply to pretty much every type of residential investment property you may wish to buy. Early repayment charges vary by product, so you would need to look into that yourself. There are a couple of limited edition products, but I don't want to spend too much time on those because they are limited edition and I want to look at what they normally offer. But they are there, so I just mentioned them in passing. There's a 2-year fixed at 3.99% with a reversionary rate to base rate plus 3.99%. And there's a 5-year fixed at 5.14% with a reversionary rate of bank base rate plus 4.14%. And by my maths, after today's base rate cut, that means that the 2-year fixed rate product reverts to 8.49% and the 5-year product reverts to 8.89%. More on that later. Because this is what I really want to talk about, the standard products. And you see it says Tier 1, which basically means this is the rates that you'll be paying if you've got good credit rating and you meet the criteria. There's a 2-year fixed rate at 4.14%. with a reversionary rate again of bank base rate plus 4.14%. The thing which really strikes me about this though is the product fee at 5%, so you need to be a little bit careful about that because that could be quite an eye-watering fee on top of what could be quite an eye-watering reversionary rate. But if you and your mortgage broker decide that a 5-year fixed rate would be better for you and your circumstances, then the current rate is 5.04%, again with a reversionary rate of bank base rate plus 4.14%, but in this instance the product fee is an even more eye-watering 7%. And after today's cut to base rate, I reckon that that means that both of these products revert to 8.89%. Now that isn't particularly surprising, and if you go and look at my previous videos you'll see that this is pretty much the standard rate for all buy-to-let lenders at the moment. We do need to be careful though, because this reversionary rate does reflect that base rate has been cut today, whereas in my previous videos obviously base rate was 0.25% higher, and so you'd need to take that into account when you're trying to compare like with like. Because before today's base rate cut, then obviously Precise would have had a reversionary rate over 9%. And so on that basis, I don't want to use the word competitive, because these reversionary rates do seem very high to me across the board with all lenders, but it's in line with what you would expect. The problem, as I've stated in all of my previous videos though, are what is going to happen if you take out a 2-year or 5-year fixed and you're paying reversionary rates at that level. Now, it seems that base rate is going to come down a little bit more. We don't know how much more. I say a little bit, it could be a lot more. But the reality is that the reversionary rate is bank base rate plus 4.14%. So it's always going to be 4.14% higher than bank base rate. Which means whatever's happening with interest rates, this mortgage rate is always going to feel high. And by the way, I'm not picking on Precise, this applies to all the other lenders as well, because as I say, they have similar reversionary rates. So the big question we have, two big questions, is A, what's going to happen to bank base rate? And B, what are we going to do at the end of our fixed rate period, whether that be a 2-year fixed rate or a 5-year fixed rate? And this is the time to be planning ahead. Because yes, it's true, there may be another 2 or 3 or 4 cuts to base rate, and so the reversionary rate may come down to near a 7% or 6.5% or whatever. But at that time it will still feel, I suspect, like a high rate, and it will be higher, potentially quite a bit higher, than comparable 2-year fixes and 5-year fixes in the market. Now the argument is, well Peter, you would just refinance away to another product with another lender. Yes, if you can, that's exactly what you may have to do. Now just as a quick thought here, I'm not entirely sure why most lenders seem to be quite keen on making it attractive to their borrowers to want to refinance away to a different lender when the fixed rate comes to an end, but that seems to be what's happening in the market at the moment. But the point is that this theory of refinancing away to a different lender only works if you are able to. Now this is my thinking. What if bank criteria changes? And I'm talking about across the board. Each bank has their own particular lending criteria. What if you, or maybe your property, doesn't fit their lending criteria at the point where you want to refinance? Well, you may be trapped into this reversionary rate, or a reversionary rate like it if you go with a different lender. And here's another thought. If bank base rate is coming down that much, does it not imply that there's probably problems within the overall economy, which means that the housing market, the property market may be quite weak, maybe values in the property market have stalled, or maybe they're even coming down, which might mean that the lenders, particularly in the buy-to-let market, decide to tighten their criteria anyway to reflect weakening property market conditions, in which case again you may be stuck in this reversionary rate, or a similar reversionary rate if you go with a different lender. I want to keep stressing I'm not picking on Precise, I'm actually picking on all the lenders. And this is why I think we need to think very, very carefully about our exit strategy before we take on a product like this. Now, to be fair, as I've already said and shown in my other videos, all of the lenders are pretty much offering this similar sort of deal. So none of them stand out as being particularly cheap. But you do want to shop around, and you do want to find the lender who's right for you and your property, and you need to be planning ahead to think what's going to happen at the end of the 2-year or the 5-year fixed rate. And this is why you need to be talking to your mortgage broker. And as I said right at the beginning, if you don't have a mortgage broker, and you will need one because most, if not all of these lenders will only deal with an intermediary and won't deal with you direct, then I recommend my very good mortgage broker. So if you have any questions or need any assistance around buying a property with a buy-to-let mortgage or refinancing, or if you are coming to the end of a fixed rate, you're not sure what to do or which product's going to be best for you, then please do drop me an email, thepropertyteacher@gmail.com, thepropertyteacher@gmail.com, and I'll be very happy to put you in touch with my very good mortgage broker. And by the way, not just for buy-to-let products, if you have any need for assistance with any type of property finance, whether that be bridging or development as well as buy-to-let, then please do drop me an email and I'll put you in touch. And if you're enjoying this video, then please don't forget to like, follow and subscribe. And please also come over to my website, thepropertyteacher.co.uk, that's thepropertyteacher.co.uk, where you'll find loads of resources, including free special reports, plus my very popular The Successful Property Investors Strategy Workshop, and the Successful Property Renovators Workshop.